Good morning, everybody. Welcome to our Q&A session on Tesla, and we'll also touch on one or two other things. Thanks for joining us this morning. Please remain muted whilst the presentation is on. You're welcome to ask questions either in the chat or by activating your microphone and asking it live. We request that you put your camera on whilst we chat about it so that we can put a face to the voice. And we're privileged to have Vaughan take us through the Tesla results, which were released recently. Vaughan, take it away.
Great, thanks, Sarel, and welcome everyone. Nice to see a good turnout. Basically, to contextualize Tesla in the face of the sort of first month of the year that we've done, we've essentially seen a number of the tech stocks bounce high. And if you look at and you unpack the analysis, what has typically happened is that late last year we had a huge underperformance of tech as the Fed was hiking rates, and the start of this year was pretty aggressive for a lot of those stocks. What we have seen from a factor basis is that those stocks that were most bombed last year have bounced hardest this year. Doesn't necessarily mean that the recovery is sustainable. It just means that the market is essentially trying to bottom pick a few of the potential stocks. That just puts it in context. So if we move on to Tesla would be one of those stocks. Is that year to date, Tesla's up 47% odd, but it's still down from sort of the mid last year of 293 before it fell quite hard. So it always is important to contextualize your starting and ending point. So Ati Nkosi-Mjebeza is our analyst who's done a great job of this. His key calls have been long the European vehicle manufacturers, which essentially you can buy on 4 PEs when you're buying Tesla on a sort of a 35 PE. So you really have to have a strong stomach for growth or really be a big Elon Musk supporter to have held it through. Essentially, I'm going to just touch through some of the issues. I'm not going to go through some of the exact detail, but bottom line is that they came in and they sort of missed earnings, but the outlook for this year is deliveries up sort of 50 odd percent to about 1.8 million. So a nice strong set of numbers forecast. So if we have a look, they came in and let me just go to the details. They came in and they reported volumes up 31%, revenues up 37%, so a little bit of pricing power on that basis. Forex impact was a little bit negative and some good sort of cost management. That was sort of the broad results, and I'll unpack a couple more slides. But essentially, the way we think about it is that there's going to be growth of another 50%. The real debate is whether they can be able to keep their pricing whole, because two things they've spoken about: price cuts in China. In addition to that, they are still well supported by essentially tax incentives in places like the US. So where we are, we haven't changed our intrinsic value. IT still sits at about $190 just under, and an exit P of 30 times, which is pretty grippy when you compare that to the VWs and the Beamers at sort of 4-6 times multiples. If we look at the outlook, so here's the volume deliveries. It's quite a nice chart that IT shows here, is that you show the deliveries in the blue since 2020. You can see 2022, they came out sort of just under 1.3 million. But remember, a couple of years ago, they guided the market to 50% CAGR growth, which would be sort of the red bars. So even though they're actually ahead of that 50% CAGR, and they're trying to be quite careful to not let the market get ahead of itself and say about 1.8 million. I'll take questions at the end. Literally, we'll talk for about another 4 minutes, and then we can take Q&A, if you don't mind.
So can one also assume that
then if you look at the grey bar, you can see that's the FactSet estimates. So FactSet analysts are getting quite optimistic and wanting to jump ahead, but Musk is starting to sort of bring people back. What is quite nice is if you look on the right-hand side, that GP margin, the gross profit margin, is very strong and well above our some of our other vehicle companies that we cover. But clearly there is a sort of a tax benefit impact there as well, which feeds into that. What is interesting is if you have a look at these average selling prices. Now, clearly there's a mix effect because they've got some high value cars and some low value cars, but essentially the average selling prices have started to stabilize versus them cut over time.
Side of the business.
On the valuation, as we said, we've got a bull bear base, almost 50% weighting on the base case. Essentially, we're looking for EPS growth of 36%, which is very, very strong. And that's going to be the area that one has to keep a very close eye on, because you need that 36% growth in order to support a 30 times exit multiple. A little bit of debt, that gets us to our intrinsic value. So the key issues that we want to be watching: volume deliveries, pricing, which obviously leads to capex, which leads to the EPS, and that will obviously support the multiple. So bottom line, great company. We love the company. He is an innovator that you've got to give him credit for. However, you can argue that he's been spending a lot of time on Twitter. And that is unfortunately the problem with those visionary CEOs. They often head off down a rabbit hole somewhere else. If he could be focused on Tesla, I think we'd all be happier. Great set of results, but it is priced for the great set of results. We haven't changed our multiple, and we sit with a hold. I think that's it. Let me open up to questions.
Thanks very much, Vaughan. I would like you to go back to that slide where Randolph put his hand up, the one with a compounded annual growth rate, the blue and the red bars. And something I was wondering before I give over to Randolph to ask his question is, how do they manage? Is it only the tax incentives that enables them to be able to cut prices for their vehicles? Because I mean, obviously demand's surging, but they keep selling those vehicles cheaper. And if I look at it from a South African context, yes, like vehicles over here are just getting more and more expensive. How do these guys do it? Is it the tax incentive?
No, look, I mean, from the gross margin at 30%, it tells you that this is a high fixed cost business. So essentially, as you push more and more volumes, essentially your costs become cheaper because you're amortizing your cost over a much bigger base. So that's how they do it. At some point, they're going to bump into that. But for now, you know, that is an easier game to play. And if anything, they are starting to lose a little bit of those tax incentives. So it'll be interesting. Off the top of my head, it was as high as 25%. I'm just going to try and see if I can find. Please, could whoever
Let me see.
mute themselves?
Yeah. Unmuted, yeah. I can't see.
Guys,
Randolph, you're unmuted.
Yeah, no, I unmuted now just to ask.
sorry, yeah, Randolph, I'll unmute you in a second. So yeah, then, oh my goodness, okay. Please, guys, if you can, muting yourself would be fantastic. All right, let's carry on anyway. So essentially, Sarel, that's the key issue. You've got it's a volume game.
Thank you. It's a great explanation. I'm muting these people. Okay. All right. Let's give Randolph a chance.
A couple of weeks ago, we discussed more or less the same thing on the Tesla forecast, and we were looking at it as that the battery investing in the battery suppliers would be more profitable. Are we still going that way, or are we still looking as Tesla as the main foregoer?
Thank you.
So Randolph, that's a good question. We don't cover, so you would be thinking Panasonic or one of those kind of guys. So we don't cover Panasonic. So we wouldn't be able to give you advice, because obviously it depends on the price that you pay, because they might in fact be discounting massive growth rates. So just to give you a sense of it, if you're thinking about the potential opportunities, and again, we're not giving you advice because we don't cover Panasonic, is a big component for these battery guys is nickel. There's a number of sell side houses that talk about sort of nickel being a key component for batteries. And then you've got Panasonic, which is the battery manufacturers. And then you've got Tesla, which obviously makes the cars and also makes power banks. So remember, we're not advocating, we've got a hold on Tesla. So we're not saying it's a buy at this kind of point, but there's a whole value chain of areas that you can have a look at to see where potential opportunities are.
No, well understood. And then also with the battery technology now moving to lithium, and lithium resources being not like when I look at the lithium resources and going forward, what they require for the battery technology, it's for me, the lithium prices are going to be, it's gonna skyrocket, because there's not enough resources at the moment. I don't know if you see it as the same point. So maybe should we start looking at like the lithium companies to invest in?
So you make a good point, Randolph. Obviously, the issue, a number of these rare earths sit in China and you can't actually invest in them. So the real question is, because China is so opaque, you're not quite sure what the supply response could be to lithium. So in broad terms, you're making complete sense. The issue is, I would go into a lot more detail into the supply of demand just to see if there's actually the shortage that is perceived to be the case.
Thank you, everyone.
No, thanks a lot. Yeah, no, that answers most of my questions.
Pleasure.
Okay. Anybody else?
Thank you.
Let me check the chat. I haven't been monitoring the chat. Okay. Carl says Toyota and BMW are looking at hydrogen-powered vehicles based on the green hydrogen. Any thoughts how this could affect the EV market in the future? We know Sasol's embarking on a great big green hydrogen drive as well. Do you think green hydrogen will become the thing that powers vehicles going into the future, Vaughan?
So it's a very nice question, Carl, because what is interesting about electric vehicles is that they lack the torque to run trucks. So at the moment, the EV technology struggles with trucks. So, very heavy loads, high torque vehicles. So they're great for cars, not so great for trucks. Whereas your hydrogen engines are obviously a lot more powerful. And green hydrogen, you typically use wind and solar in order to get the electricity to, I'm going to use the wrong term, but split the atom in order to make the water into hydrogen and oxygen. That requires a massive amount of energy. So you need a two-step process. So it's not that efficient. So the cost of hydrogen is a debatable point, but over time it'll become cheaper. And clearly that's what Sasol's doing. So remember, Sasol's hydrogen, you have to bring in wind and solar in order to call it green hydrogen. Otherwise it's it's probably blue or a different color. Probably they call it blue hydrogen because you're using fossil fuels in order to store the hydrogen. So these things are a lot more complicated than they seem, but you might not necessarily, there's probably a market for both hydrogen and EVs. So they're sort of separate markets.
Thanks, Vaughan. That's a nice question, nice answer. Anything else? Let me just see.
Sorry.
Randolph, you got your hand up again.
Yeah, sorry, I'm being a bit naggy today. Yeah, this is it's a touchy point for me, because like even moving to solar and moving to battery power, for me, I mean, we went into our whole pandemic in drinking through cardboard straws over plastic straw in a turtle's nose, and battery power it actually uses and is actually, it's not, it's actually more cost, more unenvironmentally friendly than gas and petrol. So I mean, I just want to understand if I'm the only one feeling that way, or if there's other people also feeling that way.
I think, Randolph, the the question that needs to be asked is that there's a lot of discussion about EVs and how great they are for the environment, but there's very little discussion about how they actually get rid of the batteries once the batteries, for want of a better word, are worn out. Now the batteries, those lithium ion batteries that you talk about, I happen to have one in my house for solar. I'm sure a whole bunch of you are doing the same thing. And the latest lithium ion batteries can go through 6,000 cycles. So if you work on roughly, 300 or 1,000 cycles is 3 years, that's 18 years. But it's not a bad question to ask what happens to the batteries once you've used them up, because that's absolutely terrible for the environment. One hopes that the recycling of that will get a lot better.
Okay.
Yeah, no, because I actually had a battery, and it's like within 2 years, because of the power. I mean, in South Africa, we're looking at just the load shedding. If you look at 4 load shedding cycles per day, that's already divide 6,000 by 4. That's 1.5. So that's already.
Sorry, Randolph. Can I just interrupt you? So I asked exactly the same question. The cycle only counts if you go from 100% down to 0. So if essentially you drop your battery from 100% to 50%, that's half a cycle. Now, that's not the same with the nickel metal hydride batteries that you were talking about, because those things, once you drop them down to 20%, they die incredibly quickly.
Yeah, they die. Yes. Yeah,
Okay,
no,
so
no,
you've
no.
got
No, so well understood. And then, oh, geez, the question was in my head and it popped out. But anyway, no, carry on, Sarel.
Okay, thanks, Randy. Johan says for lithium stocks, we could consider looking at the Australian exchange. There are 2 standouts there, AKE Alchem and MIN Minerals Resources. So there's 2 stocks on the ASX that specifically do lithium. We don't research them, Johan, so we're not going to wage any opinion. But certainly for the audience who want to investigate and do their own research, there are stocks on the Australian exchange that specifically specialize in lithium. James says his understanding is that there's no shortage of lithium. It's a question of how quickly the lithium can be brought to market, but no shortage. He rather thinks nickel is an interesting investment for South African investors. I think with all these renewable energies coming up, and that stock that keeps jumping to mind is the recent developments in Virginia with Renogen. So I think we need to keep close eye on that. It has run quite a bit, but I think there might be some more legs there. Any further questions, guys? Doesn't look like it.
Yeah, from my side, I'm good. It was a very informative session.
Thank you very much, Randy. Thank you, Vaughan. Thanks for your time.
Pleasure, guys.
Thanks for everybody for attending. We'll see you next week. I'm not sure what we're going to talk about next week. I see there was a gold sector report, amongst other things. So we may be touching on gold next week, and we'll keep an eye on the releases that come through during the week as well. And then we'll get together next week, same time, same place. Thank you very much for participating. Have a good day.
Thanks a lot, guys. Bye-bye.
Thanks, everyone. Cheers.